Wow, I get two in a row here. That'll be fun.
Yeah,
We're really blessed to have a speaker here today that's really knowledgeable on this subject. Back about 30 years ago, a field called socially responsible investing, where the evaluation of a company to invest in was based on what was called the triple bottom line, often thought about as 3 Ps: people, profit, planet. So all 3 things were important. This SRI movement later evolved into what sometimes was called the ESG movement, for environment, social, and governance. And the company I ended up working with, called First Affirmative Financial Network, was specializing in doing shareholder advocacy to go to board meetings and try to change policies at the companies related to any one of a variety of issues. When we moved to Milwaukee in 2009, I found I'll call it the gold standard in socially responsible investing with the organization that our speaker has represented today. And Chris Cox will tell us about that organization. Another interesting aspect of this is I found out that our Unitarian Universalist funds are a leader in this socially responsible investing. The Common Endowment Fund, where our church puts its money, is a leader in this, and Chris has some information about that also. And our UU Common Endowment Fund is where some of our church funds are placed, and also the funds of our recent endowment fund, Forge Our Future, is in the Common Endowment Fund. So we can hear or perhaps ask a little bit about how that organization is doing on socially responsible investing. The UUA Common Endowment Fund led in divesting from fossil fuels in 2014, and this church helped lead the effort in that divestment movement. And if you want to hear more about that story, talk to Terry Wiggins, who really led the organizational effort on that. But let me turn the microphone over to Christopher Cox, who's been executive director of, was it SGI, ICCR, all those?
Just seventh, well.
Tell us all about it, Chris. Thank you.
Yeah. And thank you, Bruce. And you stole some of the things I was going to say a little later by talking about Terry's good work on these things. But maybe just to start, there's a disclaimer I've put up here just because these days some of the work that we've been a part of is a bit more controversial. There have been allegations of collusion, things like that. And so what I want to say from the top is this is public information. It's to promote free discussion and the like. It's not investment advice. It's not to try and be collusive to have those of us here in this room take down big oil or anything like that. And I'm not trying to take power over your money either, okay? But trying to at least talk about what are some possibilities for you, right? I'm also going to talk about your UU Common Endowment Fund. I'm not paid by them. This is not an advertisement for them, but I've collaborated with them, and there are some things that are worth mentioning about the work that they've done that I think is really important. That's there, okay? So kind of starting with this question of why faith-consistent investing. What we do with our money is never neutral. It always has effects. They can be positive, they can be negative. They have ripples that go beyond even what we initially see. I've been with you a couple of times before, in 2016 talking about ethical garments, and in 2019 talking a bit about this work. And in 2019, I told you that money always tells a story. You know, after you've settled your basic needs, beans and soup and some basic things you need to live. Everything after that is telling a story about how we use our money. And you got to look at that story to see if it's one that you can happily live with or not. And so when we look at these questions of our values and finance, money is a tool that can support justice and sustainability. There was some conversation earlier about the dishwasher downstairs and having the disposable cups for the coffee and tea right now, as opposed to the mugs that we can recycle and reuse. There are all kinds of choices that we face in daily lives all the time. Often our individual footprint on those things is actually pretty small, but big companies have an outsized footprint on that, and they can influence those things far beyond what we as individuals can. And as small owners of companies, be it through the UU Common Endowment Fund or through your own personal retirement, you've got the opportunity to avoid harm and promote positive impact. And the other piece on that is that faith communities have long been leaders in this space. Back in 1971, a number of churches came together. The Episcopal Church in the U.S., the UCC, thank you. I'm getting my UUs mixed up, you know. The UCC Church came together, and they started working on some questions around apartheid South Africa. And a gentleman by the name of Tim Smith, who was educated at Union Seminary there in New York, was working with both of those groups. He was a seminarian with I believe the Methodists actually, and helped move some of the first resolutions in shareholder meetings around work in apartheid South Africa, companies like ITT and GM and a host of others. And it began a real collaboration within the faith community to say, our endowments, our pensions are invested in these companies, and there are some things that ethically we have severe concern about. And we're responsible for that one way or another because of our investment. And at that time in 1971, out of the National Council of Churches then began an organization that today is known as the Interfaith Center on Corporate Responsibility. We'll talk about that a little bit more in a later slide, but faith communities have been at it. The Methodists have had some guidelines about their investments for more than a century. There's one mutual fund or one investment manager that's now working in mutual funds that's been doing socially responsible investing for over a century as well. I'm a Catholic, and we were, if you will, somewhat late coming to this. But Milwaukee actually was a critical place in Catholics coming to the work of socially responsible investing. Over at St. Ben's, Father Mike Crosby, a Capuchin priest there, was pulled together a bunch of Catholics to begin to look at, okay, the other faiths are doing this work, what ought we be doing? And he had a meeting in Chicago, and there were over 200 folk that came to that meeting back in May of '73. And there was a decision they had to make. Are we going to, as Catholics, go it alone? Or do we join with the other folk and try and do this together? Mike prevailed by getting people to say, even if you're big enough to go it alone, who would want to? Let's do this work together. And thinking even of that old mantra, if you want to go fast, go alone. If you want to go far, go together. And so Mike helped organize Catholic communities, starting from right here in Milwaukee, to begin to engage companies around things in their portfolios. Father Mike, I could say more about him at some point in this if you want, but extraordinary figure, died in 2017 of cancer, esophageal cancer. He'd been a smoker back in the 60s, and when he gave that up, he became a thorn in the flesh for the tobacco industry. He was responsible for the retirement of Joe Camel as an advertising tool that attracted young people to smoking. He also engaged a lot of film and television companies and others about their depictions of tobacco, because behind your parents and your friends, the next biggest influencer as to whether or not you begin to smoke are depictions in media. You know, nowadays it'd be in TikTok and Instagram and YouTube and places like that. But in that day, it was also when you think about films and television. And so Father Mike had a resolution at the Walt Disney Company, for instance, saying, let's restrict tobacco depictions in media that is directed to kids. And that ultimately translated into a policy at Disney. It says G films will no longer have any tobacco whatsoever. PG films will not have it. PG-13 will, if it's about an historical figure who is a known smoker. So, for instance, Winston Churchill, if Disney were responsible for a film about Winston Churchill, there could be tobacco depictions if it were PG-13 or higher. If you think about 101 Dalmatians and Cruella de Vil, she was always there. Yep, but the new Cruella film, she's now smoke-free, and it's a result of that policy. So there are all kinds of ways people have been engaging companies trying to make the world a better place. And for you all, I mean, the grounding for the UU community is around values like justice, equity, interdependence, and care for all that align with fundamental investment principles. And so what is socially responsible investing? There are a lot of ways of kind of understanding the terminology, and there are a lot of competing definitions around it. But maybe I'll start it this way and ask, what makes a company good? In your mind, what's a good company? Throw out whatever you want to say.
Make a good product.
Make a good product. What else? Pays its employees well.
Gives back.
Gives back to the community, okay.
Putting research and redevelopment over dividend over profit.
Okay, so research and development over profit.
Fair pay to the executives.
Fair pay to the executive, that's not a bad one either. But one thing we haven't named yet, except for maybe indirectly, is, that's a good one too, but one we haven't named yet is profitable, right? Because if it's not profitable, it's going out of business. So one of the starting points is it does have to make a profit. But after that, what else do we look at? So I think if we were to think about, does a company unnecessarily pollute? Does a company not contaminate the air or not make toxic the water or the soil? Or does it not account for its contribution to the climate crisis? Because shareholders, people in a community, we breathe air, we drink water, we eat things that come from the soil. And that's important to us. And does a company treat its workers well? Does it pay them well? Does it make a product that is safe and beneficial for people's lives? Does a company have a safe working environment for its workers? Those are important considerations in terms of describing a company as being a good company. And then, going to those kind of more governance sorts of concerns, does a company pay its fair share in taxes? Or have they incorporated offshore and avoiding paying any of those kinds of things, even though they're using roads and even though they're using fire departments and police departments and all kinds of things that are here in the place where they're making money? Does it pay its executives in a just way? Does it pay the folks who are at the bottom in a living wage or not? Are they responsible with the full supply chain? So not just their own immediate workers, but that factory off in Bangladesh or in China that's making their widgets that they need? Or is there human trafficking happening in those places? Some companies prefer not to. No, let's say most companies prefer not to know much about that and intentionally opaque. But actually, a resilient and wise company, in my opinion, would be paying attention to those things because I know I can rely on that partner then if they're fulfilling their obligations to their workers and to their community. So that when we think about socially responsible investing, there are different parts to it. One is investment screening. And sometimes you can look at that as both positive and negative. The negative screening is where you mark out the bad companies, right? And that differs based on faith communities and values. Like what kinds of businesses, you've said that screening out fossil fuel companies, for instance, is one of the positions of the Unitarian Universalists. But what might be some other things that, weapons, guns, so firearms manufacturers like Sturm Ruger, or General Dynamics and Boeing. You were saying?
Oh, excuse me. Tobacco.
Tobacco is another one that
That's
some.
where the Methodists started, right?
Yes, yes, and alcohol. Some will screen out things like casinos, right, and gambling kinds of things. What else might someone screen out?
Big oil. Big oil.
Yep, big oil. If you're of the Islamic faith, there are particular concerns around usury and interests, and so frequently the Islamic community does not invest in banking, or if they do, they pay in charity the proceeds from that. Again, all kinds of little perspectives on things. There are emerging companies that create what we call lethal autonomous weapon systems. So think of that as like killer robots. And controversial weapons is often a category of things that folks exclude. But there can be a whole host. Another thing that is often on a list would be like private prisons, right? Well, yes, cryptocurrency shows up on some lists. I sometimes find myself surprised by companies that are asset managers or even faith communities that have investments in that directly or indirectly. And I've got a host of concerns about that particular space. But there's often less definition around that question formally, but I think there's some prudence and wisdom that can be applied there. So there are a number of reasons why one might exclude certain companies, right? And then there can be what we call positive screens, where you're saying, this is something we really believe in and we want to invest in. And so maybe that's renewable energy, right? Or maybe it's housing that particularly serves low-income communities, right? Or maybe it's, there are a class of bonds these days being developed that target helping provide money to municipalities and communities that are highly diverse, low income, and trying to help reduce the cost of capital for them to build good schools, to build good infrastructure. And that seems in a certain fundamental way to align with trying to choose good things to be investing in, right? Second thing is shareholder advocacy. So this is that work that I was describing that Father Mike helped pioneer and that Interfaith Center on Corporate Responsibility has helped pioneer, and the UU Common Endowment Fund has been a part of. I don't know what year you all would have begun that, but it's been a work of the UUA for a very long time. Shareholder advocacy is basically when you're a shareholder in a company, you're an owner. Maybe very small, but you're an owner. And that confers upon you a right to talk to the company. And under U.S. securities law, and this goes back to 1934, the standards have changed about how much you have to have and the like, and the mechanics of it. But since 1934, it's been permissible that a shareholder could submit a resolution to a company that all the shareholders would be able to vote upon. That resolution has some limits. It has to be 500 words or less. Acronyms like U.S. count as 2 words, even though we understand it. There's a whole thing about how you count to get those 500 words. A hyperlink is only 1 word, but it's still a word in that count. And you can only ask about certain things. There are some things that are off the table. So what's called ordinary business, you can't talk about in a resolution. You can't micromanage the company in a shareholder resolution. If it's something the company has already substantially implemented, you can't raise that issue with the company. And historically, the arbiter of that is the Securities Exchange Commission. They have a division within that the company, after it gets the resolution, can appeal to the Securities Exchange Commission. The Securities Exchange Commission gives a thumbs up or thumbs down, right? The criteria around that has shifted subtly, well, maybe not so subtly lately, but has shifted some over the years. I've got some slides I can show you about that. We got to keep moving. You're right. Okay. And then proxy voting. So on those resolutions and on the things the company brings to shareholders, you've got a right as a shareholder to vote on those things. Yeah, time's flying. And then community investing. And so community investing oftentimes is often it's sub-market returns, but on things you care about. That maybe your primary thing is not making a lot of money, but enough money on the return, and because of the good that it accomplished. Again, investing in like low-income housing, or investing in renewable projects, or perhaps investing in a community development finance institution, a CDFI, like Forward Community Investments here in Wisconsin. But it's about integrating values into financial decision-making, that it's not just how much money you made, but the finances being important, but also care for people and for planet being a part of that. What is UUCEF? It's a diversified investment fund for UU congregational endowments and trusts, including yours. It's professionally managed with long-term growth and income goals. It's designed to simplify investment management for local congregations, because not every congregation has investment professionals. And when you pull it all together, you get more return, more bang for your buck, if you will, with economy of scale. So over 300 UU congregations and related organizations entrust assets to that fund. Some of the values, this is all straight from their website. These are just things I pulled down. You know, it's a diversified pool, equities, fixed income, and global assets. It incorporates socially responsible investing. It incorporates environmental social governance criteria, screens out harmful industries, and it does include a percentage in community investments. My quick looking over the website says that the community investing in the Common Endowment Fund is probably about 3%, which is, for most funds, that's pretty good. There are actually a group of sisters over in La Crosse that have moved theirs to 10%, which is really pretty bold and brave. But coming together amplifies the voice of all those different UU congregations. Again, the tools that are used: shareholder advocacy, proxy voting, investment screening, community investing. I need to move a little faster here. Saying a little bit then about ICCR. Again, founded in 1971, today it's over 300 institutions, and it's $4 trillion of assets under management from all those folk. That sounds like a lot of money. I saw a wow back there. But in the global economy, that's just a drop in the bucket. But it gets you a seat at the table collectively to be able to talk to the companies. The members of ICCR are faith communities, unions, pensions, socially responsible investment asset managers, and some non-governmental or non-profit organizations. Unitarian Universalist Common Endowment Fund is a member, and their engagement comes within that. And actually, the last little bullet I moved off to elsewhere. Say briefly about what you can do. I think supporting the work of your Common Endowment Fund is important, and recognizing the good work that it does. I think some of the things we can do as individuals is thinking about how we align our investments. And one of the critical things, because often we don't have that much money as the big pools do, but to vote. Just as we vote in federal elections and state and local elections, voting your proxies. Every year, every shareholder meeting has at least 3 questions that they give you. 1, who ought to be on the board? And for instance, if the board is a whole bunch of white males, folk who look like me, it probably makes sense to vote down that board, especially if you've got XX chromosomes, right? If you're not represented there. If that board does not have diversity, that too is a pretty good reason to vote against the nominating committee, for instance, on that board. Next question they're going to ask you is a say on pay. And they'll tell you how much they paid the chief executive. If I were just polling right now, how many of us think chief executives of most companies, especially S&P 500 companies, are underpaid? Underpaid. We need to boost up their wages.
How many think they're overpaid?
Well, that's, yeah. There are a whole lot of kinds of things we can bring into that thinking. Like, for instance, some companies reward executives when they lay off a bunch of employees, right? I remember, probably almost 20 years ago, Disney laid off a bunch of workers, and the CEO got a bonus that was more than the annual wage of all those workers. Now, he saved the company money over years, but that's not the message that management ought to be sending to the workers. They're important. You know, when we say our workers, our workforce is the most valuable part of our company, they weren't actually addressing it by that action. When the CEO's wage is going up faster than the wage of the median worker or the lowest paid worker, that also sends a signal to those workers that they're not important. We've got companies now, this year, Tesla investors were asked if they wanted to support a $1 trillion wage, basically, for Elon Musk if he hits certain targets. And the bulk of investors supported that. And sometimes it's that these are automatic votes that people are making that are just not wise. And they're not good for society at large. New York Times 2 weeks ago just reported that Jamie Dimon of JP Morgan Chase's compensation topped $770 million last year. And the question, if I were to go to the old film Wall Street, how much is enough? How many yachts can you water ski behind? You know, and faith communities have and society has a notion of what a living wage is, you know, in terms of what's the bottom. But we aren't really good at defining what's the roof. But maybe if we get stronger about that roof, we can actually at least help lift up what that bottom is and make sure that society is a bit more equal, a bit more equitable and just. So voting your proxies. The third thing you get to vote on is who the auditor of the company is. And sometimes there are big problems with auditors and they need to be replaced. The other things you get to vote on are shareholder resolutions. And I'd urge you to support ours and think carefully about the ones that didn't come from ICCR members or groups like that. But I can talk about some issues. I can talk about some of the contemporary challenges, especially with Public Servant 47 and the Securities Exchange Commission that we have currently. I also have some other things kind of looking at what topics have been brought up in shareholder resolutions, and I can talk, I've got a website open over there I can show you, if you're looking for help on how you vote your proxies. Where would you like me to go? And what questions do you have? I know we're getting short here on time.
Yeah, let me hand around the microphone here for people who have questions. We have to speak right into the microphone to get it to speak, but got one here.
I'm interested in the structure of your organization. Are you a FINRA-sanctioned broker-dealer?
No, I'm not.
You're
I'm not.
not. Okay.
My work in my organization actually closed yesterday. I've worked for the last 10 years with 25 Catholic religious orders, a Catholic hospital system, a Catholic diocese. Marquette University has been a member, helping them talk to the companies in their portfolio. But I'm not a financial professional in that regard.
Does the organization you're discussing offer multiple funds, mutual funds, or ETFs?
My organization did not or does not. The asset managers inside of ICCR, some of them do.
Okay. And interested in research. Are they using Morningstar's ESG ratings?
There are, some will consult that. One of the problems some folks have with Morningstar is that it does not screen well for issues around Israel and Palestine. That's one of the concerns some people have. But yeah, so, I mean, Morningstar has interesting data, and in my work, typically, I don't have the money for the big subscriptions for that or Bloomberg or the other things. I used a lot of free and open source things, and there are some surprisingly good pieces of data out there. We've got a couple over
While
here.
I'm going over there, tell us what the Trump SEC is doing. They've made some changes like Trump is doing in lots of different places.
So 2 changes from the fall and just last week. One, because of the shutdown, with that as the rationale, the Securities Exchange Commission, which used to be the umpire on resolutions, if they could be included or not, The Securities Exchange Commission put up a ruling that basically said, because of the shutdown, we don't have time to look at this. So companies, you are wise and prudent. You make your choice if a resolution goes forward or not. And so given that option, most companies don't want to talk about climate. They don't want to talk about their lobbying. They don't want to talk about the rights of their workers. So most resolutions are not going forward this year. The second thing was, I was permitted by the Securities Exchange Commission to write what we call an exempt solicitation. It's very technical language. It's a lot of financial and it's a very technical kind of piece of writing. I wouldn't recommend spending a lot of time reading them if you're not accustomed to it, but it advises asset managers and others about issues related to companies. And small shareholders had the right to file those before, but because of a decision by the administration, not 2 days ago, but 9 days ago, you have to have $5 million in shares in a company now to be able to share that with other shareholders. So it kind of takes away the voice of smaller shareholders. And that's a concern for us.
I have two questions. One, does the social responsible investing take into account movements or issues like BDS? And then the second question is, could you say more about the cryptocurrency?
Yeah, so in terms of things like BDS, there are different notions around how to attend to that. And I think each group ultimately has, and this is true in everything, that each group has to
What's
make their own
BDS?
decisions. Boycott, divestment, sanctions. And so, for instance, there are those who would say, we're going to boycott big oil or big tobacco or Israel or, take your pick. And so there are those who choose that. There are others that don't. And the founder of the organization I led was one who basically said, if you divest, you lose your seat at the table. So he would always keep, even in companies that were problematic, he would keep at least the minimum amount to be able to file a resolution. So, these days that was $2,000 worth of shares if you've had it for 3 years, $25,000 if it was just 1 year. And so making sure you're above that threshold to be able to talk to the company. So you've got the seat at the table. Your second question was about cryptocurrency. So the General Accounting Office put out a report a few years ago talking about how cryptocurrency is used in narco-trafficking, it's used in human trafficking. There are a number of very problematic uses that come from that have not been remedied in my mind. Secondly, I've just got a concern to say, IBM makes stuff. It's got concepts. At the end of the day, they've got more patents than anybody else. If they go bankrupt, there's still some value inside the company. If cryptocurrency goes kaplunk, what's left for investors in that? And so I guess those are the kinds of things that personally that I take to that kind of conversation. Please.
You have a question?
I always got proxy statements with, at the end, environmentally friendly resolutions on it, and invariably the board of directors will always say, vote against. And I send it in voting for, just for the fun of it.
The boards, if they support what's being said in a resolution, 99.9% of the time, they will have already made an agreement with the investor, and it would never even appear on the proxy. There are 0.1% of resolutions. The board actually comes around and says, we support this, therefore vote for it, and they wind up with very high margins. But oftentimes it's these kinds of things that we've got to drag them kicking and screaming to the table to talk about with us. And it needs the investor support. So I appreciate you voting with us.
I just wanted to mention, while we were on the topic of cryptocurrency, that my financial advisor told me that there's a lot of energy used in mining the cryptocurrency. Which
Yes.
sounds strange to mine cryptocurrency, but that's what they do.
Yes, you know, like when we think about the issues around data centers and the use of water and energy for that, cryptocurrency likewise uses a lot of computing power that has those kinds of effects. And certainly I should have mentioned that in my comments about it as well. And, you know, there are prudential minds that may differ on some of these matters, but those are all things that I think someone of goodwill has to take into consideration in terms of how they address those matters.
Many of us own shares in mutual funds like Vanguard and a bunch of others. How can we as shareholders in Vanguard influence how they vote at shareholder meetings?
There are two things you can do with mutual funds. One would be, I would say, go to the ICCR website, iccr.org. There's a new report that assesses large mutual fund proxy voting, and it gives you a numerical assessment of how they voted on issues related to socially responsible investing. And unfortunately, those results are pretty disappointing from the big asset
Vanguard,
managers.
I've heard, almost always votes the company's recommendations.
Yes, and I can tell you about a conversation I had with BlackRock on a matter as well, but because that's at least known. Vanguard, but all the big ones tend to vote with management on most everything. But the second thing you can do, so after you get informed, second thing you do is write your company, your mutual fund company, and say, you know, I believe that these things need to be voted in a different way. Some mutual funds are now giving voter choice, and so that like some BlackRock funds will let you say, I prefer to vote on the climate issues this way, and there may be others who say, no, drill baby drill. But at least it gives an opportunity for the investor, the owner of that asset, to be able to, in their small little percentage, be able to say something about where that's going. There are also the opportunities to move to mutual funds that may better align with your values, although sometimes they may have higher fees than Vanguard. Not just may, they will have higher fees than Vanguard because they're about as low as anybody. But those become kind of the choices that one has to make.
You mentioned go to the ICCR website, but you also said it's closing. Is the website
No,
going to...
not ICCR. ICCR is open. ICCR.org is still open.
Oh, okay.
My organization, Seventh Generation Interfaith.org, is closed, but the website's still there, and our materials are still there, publicly available.
Why did you close?
The main
The
driver
question was
is
why
that-
did SGI close?
The main reason why we closed is that most of our members were women's religious communities, so nuns, and they're older and fewer. And so as an organization, we just didn't have the viability and vitality that we had 30 years ago. When I started going to Interfaith Center on Corporate Responsibility meetings, there were a lot of nuns in the room. And last October when we gathered, there were 3. And one of the legends in our work just died on Friday, for instance, from the Philadelphia Franciscan Sisters. And so there just aren't as many sisters as there used to be, and so that work has to be picked up by other people now.
Could you comment about private equity funds that are going around buying medical institutions or housing, and comment about that capitalist model and how that's impacting our culture, our country, et cetera?
Well, there are a couple parts to that. One, especially like in terms of healthcare, one of the biggest ones that's eating things up is actually publicly traded. That's United Health Group. They own, I think I saw a report saying 2,700 companies underneath that are providing healthcare in a whole host of ways. And there are ways that shareholders have been trying to work with United Health Group to make that more transparent, but also to kind of resolve some of the inconsistencies in the ways that that drives expenses in healthcare. On the private equity piece, that's not my forte, but what I would say on it is this. Institutions and people invest money in private equity, right? And you have general partners and limited partners. And so I don't believe I saw anything in the files that I looked at online, but I don't think the Unitarian Universalist Common Endowment Fund is invested in private equity. But if it were, it's probably as a limited partner. And as a limited partner, you have the right to put in a side letter. Unions put in side letters on those agreements to be part of private equity. And they may say, we're not going to invest in companies that don't pay, or that are opposed to worker organizing and worker voice. We're not going to invest this private equity fund in things that work against the needs of workers. So one could put a side letter saying we're not going to invest in things that drive up the cost of healthcare for common folk, you know. And that's kind of the only leverage you've got on private equity is as an investor.
I am totally ignorant about finances. What is private equity?
So public equities are companies that are publicly traded. You can buy stock in them. Private equity, and really when you think about like private companies, are probably a much, much bigger universe than the publicly traded companies. So I'd have to think of like who's a good example here in Milwaukee, and I don't know that I'm coming up with one off the top of my head. But Koch Industries is it's privately held. If they wanted, they could give some portion of that fund, of that company to private equity, which would have a voice depending on how large it is. Private equity includes like KKR, and which is a big firm in New York that is publicly traded, but underneath it's private equity. There's also Blackstone is another very large private equity company. But they could go to Harley, for instance, and say, Harley, we'd like to buy you and all your shareholders out and take the company private. And they may pay all those shareholders, and the shareholders have a right to vote up or down on that idea. But then once they take the company in, they have free rein in terms of decisions that are made about the company. Sometimes it can rescue a company, sometimes it can kill it.
A private equity entity is coming in and buying all the houses in Milwaukee that were in bad shape. They buy them and they sort of pick them up and then they sell them and get out of town. Is that accurate?
That's the reporting in the Milwaukee Journal-Sentinel, as well as local newspapers in Columbus, Ohio, St. Louis, Missouri, Atlanta, Georgia. There's a company, it's a nexus of companies. The local one is it Riverbrook, I think? And that's held by like NextPoint and Highland, and it's really opaque, the connections between some of these different companies. And yeah, they have owned a lot of housing stock in Milwaukee. I'd have to go look to see what the current amount is. And they at least have a reputation in certain communities for not maintaining the housing as well as they ought. And there are legitimate reasons for concern about that, and that's the reason why a lot of states are looking at legislation. And, you know, even the president and others have been talking about concerns around investment in housing by big companies. Yeah, it's a longer story than I can get to, I think.
Okay, it's almost 11 o'clock, time for the second service for those of you who are going. Chris, you said would you be willing to stay
I
to
can stay
show
and talk
some
to
more
folks.
slides? Is anybody interested in staying to see his additional slides? Diana, I'm going to go to the service downstairs. Yeah, okay.
Okay. I should have known that.
Thank you so much.
Oh, you're welcome. Glad to be with you. So.
Looks like most people are going to the service.
Yeah, well, we can shut down the Zoom if you, or the YouTube if you want.
Thank you very much.
Yeah, and I'm happy to
luck.
keep talking. Oh,
Yeah.
You're welcome.
Good luck.
Much